Coming up on Market to Market, Vladimir Putin plays a high-stakes game of chicken with U.S. agricultural exports. And students gain hands-on farming experience at a leading land-grant university. Those stories and market analysis with Mark Gold next.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it. This is the Friday, August 8th edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. A key government report this week revealed that America's trade deficit narrowed in June. According to the Commerce Department, the U.S. trade deficit declined 7% in June to a seasonally adjusted monthly imbalance of $41.5 billion. Total U.S. exports rose to an all-time high of $195.9 billion, while imports fell 1.2% to $237.4 billion. Imports of petroleum products declined significantly. And U.S. agricultural exports are estimated at $150 billion in 2014. If realized, that would be an all-time high and would add to the past 5 years, which were the strongest in history. But the outlook for American agricultural exports darkened a bit Wednesday, when Russia restricted imports from the West. Russian President Vladimir Putin retaliated this week against Western sanctions imposed over the crisis in Ukraine. On Wednesday, Putin banned all imports of meat, fish, fruit, vegetables, and dairy products from the United States, the European Union, Australia, Canada, and Norway. The one-year ban was announced in the wake of new sanctions imposed last week by the European Union, which for the first time targeted entire sectors of the Russian economy. In addition to concerns over Russia's annexation of the Crimean Peninsula, both the U.S. and the EU have accused Russia of supplying arms and expertise to pro-Moscow insurgents in eastern Ukraine. Russia accounts for less than 1% of total U.S. agricultural exports, but it depends heavily on imported foodstuffs, particularly in its largest and most prosperous cities like Moscow. While the move could have a significant impact on prices in other countries, including Russia, it had virtually no effect on U.S. commodity markets Thursday. According to the Agriculture Department, the EU exported $15.8 billion worth of farm goods to Russia last year, more than 12 times the amount of U.S. shipments. In 1938, Dr. William Murray, an economics instructor at Iowa State University, developed an innovative curriculum. Murray was convinced that students needed the experience of managing a working farm to better prepare them for careers in agriculture. A 187-acre farm was purchased in 1942 for $150 per acre, and Murray's dream was realized when the first crop was planted in 1943. 70 years later, Iowa State's Ag 450 class continues to help students apply proven management practices and profitable marketing strategies in the real world. David Miller explains.
It's been a typical fall at the William Murray farm near Ames, Iowa. The harvest is bountiful. Grain is being hauled to the homestead for on-farm storage or delivery to nearby elevators. And hogs are being checked before they are sent to the local packing plant. On closer examination, however, you will discover this isn't the William Murray farm, but a working classroom, and the diversified grain and livestock operation is overseen by 54 Iowa State University students.
It's not just another class where, tell me what you want me to know, I'll regurgitate it back on a test, I'll get my A, B, or whatever it is, and we'll move on. They actually get excited about what they're learning, and I think that's really what it's all about. You're showing less nitrogen use on the home place, right?
Dr. Tom Paulson is part of a long line of professors who have acted as guides to the hands-on educational experience over the past 70 years. William Murray founded the class. It was his brainchild that came to fruition in the winter of 1943. Murray's idea was to give agriculture students experience in managing a working farm before they returned home to family operations or entered other agricultural professions.
We see this growth on a week-by-week basis. It goes from walking in starry-eyed saying this is going to be easy to saying, whoa, there's a whole lot more to this, and being frustrated with the amount of information and trying to discover what it is they really need to do, because we don't tell them everything they have to do. They have to decide.
To work on this farm, the only one of its kind at a land-grant university, you must take a course offered by the College of Agriculture and Life Sciences called Agricultural Education and Studies 450, more commonly known as Ag 450. A major portion of what happens here is determined by the students, and to get approval for any project, a student must convince a majority of the 53 other class members.
Contracted 10,000 bushels of corn.
Ag 450 provides an opportunity for students to explore ideas and concepts in a real-world environment. Many students operate complex farm machinery for the first time, while others gain practical experience with projects deemed too expensive to experiment with on their family's operations. Most of the students are enrolled in the College of Agriculture, but only 30 to 50% will return to family farms.
And I wanted to take it to try to learn new things, some technology, some new equipment that I might not otherwise have a chance to run, new ideas. And then that way, when I go back to the farm, I can contribute some experiences and ideas. There are a lot of people who do stuff in life for the money. I'm going to farm just because I love it.
Okay, we'll go ahead and call the meeting to order and have Sammy.
1 day per week is spent on campus discussing and voting on various farm project proposals. The class is split into 8 committees covering everything from crops to machinery to public relations. Each group is responsible for keeping the farm operating properly. The student farm managers also are required to spend 1 day per week at the Ag 450 farm located just south of campus. Because the on-farm classroom only holds 35 students, the class is split roughly in half. And students quickly discover one of the biggest hurdles to passing the course is finding ways to communicate effectively between the 2 sections. The ultimate goal of every Ag 450 class is to make the farm profitable 3 out of every 5 years. Utilizing a budget of nearly $750,000, this semester's class begins where last semester's finished. In the spring of 2013, 596 acres of corn and soybeans were planted on a combination of Ag 450 ground and other land owned by Iowa State University. An additional 800 acres were custom farmed for other university departments. And 3,500 head of hogs were finished on contract for a private Iowa company. As the semester drew to a close, harvest began. A total of 71,840 bushels of corn were sold to local elevators at an average price of $4.61 per bushel, and all of the 5,174 bushels of soybeans harvested were sold at an average price of $12.60 per bushel. Early projections found the 2013 corn crop was 30% smaller than expected, but the students making predictions in the fall of 2012 couldn't have predicted a second year of drought in Iowa and a decline of nearly $3 in price. But favorable oilseed production and prices may have cushioned the blow. The soybean crop was 8% larger than expected and sold for 60 cents higher per bushel than projected in October of 2012. The final accounting handled by the spring class of 2014 showed goals had been met and expenses covered. Spearheading the plan for 2014 planting intentions was Sammy Bissell of the Crops Committee. Her proposal for taking advantage of seed varieties with a higher yield potential was adopted by the 6 other members of the committee. Factored into their proposal were more expensive seed and the loss of 100 acres of rented land. Also on Bissell's mind was the thought of losing money. In 2010, the farm was a few bushels of corn short due to weather and yield estimates, and students from that class were forced to negotiate with the local grain elevator to satisfy the contract. After satisfying Paulson's concerns, Bissell brought the proposal to the class for a vote.
Together, the whole crops committee put together our enterprise budgets. So with everything, all of our expenses, all of our inputs, we're going to make $78,000, or $78,828 for everything. Assuming we have everything paid for, and that has the drying cost of all corn included in there and stored. That has no discounts on our seed that we're potentially purchasing.
Your returns are projected off of bushels times the price, right?
Yes.
What do you use for pricing?
The corn was like $4.20, and our beans were straight $11.
The motion restated was that we would move forward with the proposed, and can I get a show of hands, those in favor? Okay, that's majority. Thank you. Motion passes.
Thank you, guys.
The entire presentation and vote took less than 5 minutes to complete. For Paulson, those are the moments he lives for.
In this course, there's a certain time where they start to get it, but they don't necessarily get all of it right away. But they realize real quickly that this is not their home farming operation. This is not another Iowa State University research farm. It's not another farm that maybe they worked at when they were growing up. And once they get that, they see that, and the aha moment happens, they start to make decisions that are based upon what's really here and not what somebody else wants them to make decisions about.
Next semester, another class will take over the operation with hopes of making it profitable and keep William Murray's dream alive. For Market to Market, I'm David Miller.
Next, the Market to Market Report.
Wheat prices rallied this week while corn traded sideways. For the week, September wheat gained nearly 15 cents, while the nearby corn contract moved fractionally lower. Old crop soybeans recovered from last week's loss as the September contract gained 40 cents. Nearby meal prices followed suit, advancing by more than $12 per ton. In the softs, cotton snapped its losing streak as the December contract gained nearly $1 per hundredweight. In the dairy market, September Class 3 milk lost a nickel, while the deferred contract moved 16 cents lower. But the big story again this week was in the livestock sector, where the October cattle contract moved limit down on Thursday and Friday to settle with a weekly loss of $6. Nearby feeders declined by more than $5, and the October lean hog contract lost $3.50. In the financials, the euro lost 2 basis points against the dollar. Crude declined by 23 cents per barrel. COMEX gold gained $16 per ounce, and the Goldman Sachs Commodity Index moved fractionally higher to settle at 617.10. Here now to lend us his insight on these and other trends is one of our regular market analysts, Mark Gold. Mark, welcome back.
Thanks. Nice to be here, Mike.
Well, we're glad to have you as we look at the situation in the wheat pits today. Coming at the end of this week, how much of this is being driven by situations over in the Baltic and with Russia?
Well, certainly the Russian situation's having some impact on the markets, but more than anything else, it's the quality of the wheat in the European Union that's got everybody's attention. In particular, Poland and Germany's wheat seen a lot of wetness, and it's really had an impact on their quality of the wheat. And a lot of people believe that a lot of that wheat will wind up being feed wheat. So that's been giving us a push here in the U.S. for our export, potentially for our export market. And with the Russians, some people are concerned that maybe the Ukrainian situation might kind of limit some of their exports. We don't think so. We really think this rally really has been about the quality issue more than anything else. And we've also gotten to the point where we're more than 90% harvested on our wheat. We're due for a bounce. We've gotten through the harvest pressure. The funds are short, which I think is a good sign for higher markets, and hopefully we can get some more short covering. Looks like we're trying to make a little bit of a low in here, but we keep getting kind of dragged down by the corn a little bit. But I'm still a little bit hopeful that we can see some higher prices.
And especially it looks like for higher protein wheat producers.
Absolutely.
Might see good marketing opportunities in the week, 2 weeks ahead. Would that be a correct time frame?
Yeah, I think that's a reasonable time frame. We'll see what the report says on Tuesday. But left on its own, I think the wheat might have the rally first before the corn and the beans. We're still looking at some pretty big crops in terms of corn and beans, but with most of this harvest behind us now, I still think there's a relatively good chance that we can try to be a little bit of an independent leader.
All right, well, let's jump over to the corn pits. Corn, relatively unchanged this week. Is the market just trying to digest what's coming as we look at the new crop?
Well, we made our lows Sunday night, and we tried to rebound all week. We kind of drifted right back toward that 361 low on Friday. We got down, I think it was 363, so within a couple of cents of that. Obviously, we've had some good rains this past week all throughout the Midwest. Iowa, Illinois, Southern Illinois, Northern Illinois, Indiana, Tennessee, Kentucky, all got good rains, which they needed. We've had a pretty dry July, but again this year we had the cool temps, which certainly helped. The crops I've seen from Iowa, Illinois, Indiana, and Michigan look pretty darn good. Maybe the best I have ever seen, with the exception of Michigan, a little bit ragged in some points with the cold, wet weather they had early, but they've come back pretty well. And the rest of the Midwest, in my opinion, looks awful strong.
So as we take a look at this tremendous crop that's going to be running through the combine here beginning in about a month, what's your advice to producers? How do you, if we've put the low in and we seem to have held it this week, hold your breath and hope this thing climbs?
Well, I don't believe holding your breath is ever a great marketing opportunity in here. We still want guys to be proactive. We did buy back some call options a week ago on some of the grain that we've sold 3-4 months ago at great prices. We felt it was time now to try to ease back into more ownership again. But we still have puts on to protect the crop that we haven't sold. Now, people will say, well, how can you be long calls and puts? Something's got to go wrong there. And the fact of the matter is, we might see the rally in the short run on the calls, be able to take some opportunity out of that, make some more cash sales, liquidate some of those puts, maybe then catch the puts again on the downside. I don't think that this market has seen the bottom. I think we've got a potential that we built a lot of negativity into this market over the last 2 to 3 weeks. Everybody's looking for, 172 on the corn yield. I don't think the government number will be that big, maybe get a little bit of a bounce here. But I think when these combines roll and they start seeing 2.25, 250, 275, and in some places it'll be bigger than that, we're looking at an awful lot of grain, and I think we're going to have maybe a little push up, and then sometime harvest or post-harvest, we'll be making some new lows in this market yet.
Okay. All right. That'll be the true low when we get in there.
Yeah.
See what the yields are reporting on the monitor. Let's jump over to the bean side. And again, let's focus on new crop beans. That's the question out there today. Crops looking tremendous. How do you market in this environment where we're up 26 cents this week? What was the news? What caused that?
Well, most of that, I believe, was off of the old crop prices. We had some pretty good strength in this August and September contracts. The August contract has gained back about $1.20 of what it lost in the last several weeks to this market. It's actually at the highs it was at when we had the highs in these markets back in April and May. So it's been really led by this old crop. The August beans go off the board next week. I think it's on Thursday. So I don't know how much longer this will last and keep us pulled up, but there could be a little bit more push in there. But when you look at this bean crop and you look at the number of pods that are potentially out there on these plants, we don't hear about anybody talking about BB-sized beans. We're talking about pods well set out here and looking awful strong. When we start going through these crops, I believe, again, the government won't show us how big this crop is right now, but I do believe bigger crops get bigger over time, and ultimately we're going to see perhaps another 50 to 75 million bushels on top of what we're looking at now. We'll know that at the end of harvest, and that's when I think we're going to make our ultimate lows.
So this 1080 to 1090 level that we're in today, would you be an active marketer in here?
I'd certainly be looking at some put options to protect the downside. They're not cheap, but in my opinion, they're still protecting what could still be a $2 to $3 risk in this bean market. We hope that the market goes higher and we can sell a $2 or $3 rally, but in the meantime, we can't afford to look at this market and just say we're not going to do anything. And when you look at next year's crop, if you look at the 2015 corn bean ratio on the new crop for 15, there's still an incentive to plant more beans next year. So we want to stay ahead of this bean thing and be prepared for lower prices, but still keep the upside open.
Okay. Well, speaking of being prepared for lower prices, let's jump down and talk fat cattle. 2 limit down days, end of the week this week, Thursday and Friday. There's talk that's tied into Russia, but they're not much of a beef buyer.
No, it's going to have as much of an impact on pork and poultry as anything else. We're going to look at a situation how much of that's really going to affect our markets. I think as we get more protein available to our market, whether it's pork or poultry, that's going to put a little bit of a pressure on the cattle prices out there. We're starting to see, I think, some of the end retailers shifting some of their practices to make the beef price a little more palatable. I don't know if that's going to stick well with the American consumer. But the other thing beside this Russian deal that's affecting beef prices, in my opinion, is the stock market. I know the last time I was on, we talked about watching that stock market. If the stock market was to give it up, I found it hard to believe that the cattle prices would stay high as well. We've seen almost an 800-point drop in the Dow Jones. We had a 180-point rally on Friday, and the cattle still stayed down. That tells me that there's some more inherent weakness in this cattle market, and certainly we are still within 2 or 3% of all-time historic prices that guys have dreamed about their entire lives, and not to protect it with a put option. And granted, they're not cheap. You're going to have to spend $3.50, $4, $100 to get something, but you're protecting maybe $20 or $30 worth of risk out here. That's a trade I believe the American farmer has to look at quickly.
And is that the same strategy you'd be applying in the feeder cattle market today?
Exact same strategy. We're again at historical high prices in here, and yes, the numbers are low, but if we've kind of changed this demand curve a little bit in this cattle, and we're starting to see maybe a few more animals out there, we saw the cash start to back off. First time we've really seen that. Now we did, I think it was 2 months ago, we had a break of about $13 in this cattle market. Came right back. The feeders made new highs, fats didn't. But the fact of the matter is, I think it's going to be a little bit tougher with this Russian news, with the stock market down, for the cattle to be able to come back. At any rate, we're content spending some money on puts, protecting that downside, and let's hope that we can make a new high for whatever reason and sell our cattle at even better prices. That's a situation we can certainly live with.
Certainly. Well, now let's jump down and look at the hog market. As you mentioned, possible implications with the Russia deal. We've seen the hogs been declining now close to a month. Is that a trend you expect to continue?
I think the hogs are in a little bit of a tough bind in here. The ped scare seems to have kind of eased its way out of the market. Farmers certainly seem to be doing a little bit better job managing that risk out here. The August contract goes off the board on Thursday on the hogs, and that is the only one currently that's still over $100. The October's closed under $100 this week. So we've kind of taken, this is kind of where we were at in the pre-ped values before that. You've got the back months sitting there out there, $84, $86, which is kind of where we were at.
Yeah.
So I think we've kind of budgeted this in. The Russians take about 5% of our pork, so that's going to be a little bit of a hit here. There's going to be more product available, and I think all that combined with the poultry, we're going to see a little bit cheaper prices out here.
We'll see some pressure.
Yeah.
Well, Mark, thanks for taking the time to be with us this weekend.
Always a pleasure, Mike. Thanks.
That wraps up this week's show. But I want to let you know about a special event next Friday when we'll kick off Market to Market's 40th season at the Iowa State Fair. The special program will be taped with a live audience at the Pennengroth Media Center in the Cattle Barn on Friday, August 15th at 3:45 p.m. We've assembled a blue ribbon panel of analysts to answer some of your questions, and we'll look back at the early years of the program. This special live taping is open to the public. Doors open at 3:15 p.m., and I hope you'll join us next Friday for a very special edition of Market to Market at the Iowa State Fair. Until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company. Offering a full line of grain drying and storage equipment and steel buildings, Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it.